Hey guys, welcome to day 2 of the under 65 training. I've had a lot of compliments on the first training that Amy and Steve did. And Amy asked me how she could do better in the second one. I said, get rid of Steve. And so she did. No, but Amy is flying solo today. But you guys are in great hands. She is going to let you guys know a lot more stuff about under 65. So I'm excited about that. So without further delay, Amy, all yours.
Perfect. Thank you, Dallas. Appreciate the opportunity to share with you all once again. So for those of you that joined us earlier this week, we talked about prospecting and how to get those leads into a client and showing up to the second appointment. We started from the hard route with over the phone prospecting. Many of you will sit across the table or have referrals from your Medicare clients and their spouses and things like that. So if you missed that one, I would encourage you to go back to review that, because it starts there to get them to the appointment that you get to sell them here. So today we're going to go through how to present a package sale. You never want to try to add it on after the fact, at the end of the sale, the next week, the next month. This all works together. And for those of you that were at the main event, we talked a little bit about why this is important. So I will remind you, or those of you that were unable to attend, package selling is ridiculously important because most Americans have $1,000 or less in their savings account for emergencies. That's all emergencies, not just medical. So when you know that the $5,000 out of pocket or $8,700 on an ACA plan is much more than $1,000. So we are not truly helping our clients if we are not packaging the health piece with ancillary products such as accidents, critical illness, life insurance, dental, vision, all of those things. So that's why packaging is important. If you really care about your clients, you happen to actually double your income by packaging, but we're leading always with integrity and taking care of the clients first. And by the way, we happen to make a great living selling insurance at the same time. So do you guys see the quote sheet? Can anybody? No? Dallas, can you help me with that? Perfect. There you go. All right. Okay, so you can see part of it anyway, which is fine. If you can make it bigger on the screen, like take the left-hand column out there. Okay, that's fine. Are you going to be able to be my Vanna and scroll down when I need it? All right, so this is a quote sheet. This is what we use in presenting to our clients. Now, if you have really technology savvy clients, you can have them join a screen share with you. Otherwise, you can email this to them. You can go through it with them. What I find that I do a lot in presenting is I am educating them about their options on under 65. And then they are telling me as we go, what ones make sense for them and what does not make sense for them. Some people are like, yeah, I like the ACA. I kind of like to see the short-term options as well. Others are like, the ACA doesn't jive with me. I only want to see the short-term medical. So sometimes I will educate them on the phone or in a face-to-face appointment. And then I will put together a quote sheet for them after the fact with only the plans that are of interest to them. And why that's important is that we don't want to confuse people, right? Send them 5 or 6 different quotes. Then they're like, holy smokes, like, is this helpful or not? They're still confused. And when people are confused, what do? Nothing, because they're still confused. Health insurance is confusing and boring. So our job is to unconfuse it as much as possible. So you can utilize a quote sheet, live in a screen share. You can email it to them to go through with you on the appointment, but they will be scrolling through and not really listening to you as much. Or you can talk to them and send that after the fact for them to read through all the brochures. What's nice about the quote sheets is it will show kind of a 30,000 foot highlight view of the plans, deductibles, co-insurance, max out of pocket, co-pays, and things like that. Within the quote sheet is also brochures, so they can open the brochure, read all the fine print and the details. There's also network links, so they can look and verify, because I've already checked to make sure their doctors and hospitals are in network, but I want them to check and double check me. Or maybe they're like, hey, we like to go to this place in Florida, I want to see how we're covered while we're there. They can do that. So now Steve's not here today, so I'm going to go through as if I was talking to him about picking up where we left off on our first call about the options in health insurance. So these are this is the conversation that I have with clients all the time. So I would be saying, hey, Steve, thanks for joining me again. Is this still a good time for you? Steve says, yes, usually, because remember, I took his pain, took it to 911 level. And so he's wanting to talk to me. So I say, okay, Steve, I want to just go through all the options with you. I took all the information that you shared with me, went out and searched all of the plans available to you in your area for your specific needs. My job, Steve, is really just to educate you as to what in the world are these options anyway? How do they work? How do they not work? Because I want to be very vulnerable and transparent. The days of there being a perfect health insurance plan that, is a low deductible, all the doctors take it, it travels with you, it's really affordable, have been gone for a number of years. So I just want to be real with you and tell you the pros and cons of every kind of plan. And as I talk through that, ask any questions that you want, but you're going to find yourself aligning with certain plans and maybe not with others. And I just want you to feel free, as we talked about initially, to tell me, no, you know what, that doesn't really work for me at all. Because this is really about you and what makes the most sense for you and your family in regards to coverage and price. Does that sound okay? You good with telling me no, Steve? To which they say yes, because they're relieved that I'm not going to be a high pressure salesperson and try to force them into something maybe that they don't understand. Then I further tell him, you're welcome to take as many notes as you want to. Know that this quote sheet is yours. And if I haven't already emailed it to him, I'll tell him I will email this to you. So you'll have it where you can dig down through the brochures and the network links. I want you to be comfortable with everything about your plan. Read and understand as much about the exciting world of health insurance as you can stand to. Does that sound okay? And they usually say, yes, that's relieving also, because they're not feeling like they have to absorb every detail in one call. So Steve, again, like I said, my job is to educate you about what in the world the options are out there. So one of the options is the ACA, which is the Affordable Care Act. It's oftentimes referred to as Obamacare or the Marketplace. Have you heard of those plans, Steve? Yes, most everybody's heard of the Marketplace. Because the government has $1 million marketing budget, I do not yet. So this is what most people know. So the benefits of the ACA plan, Steve, is that it will work more like the group plan that you're on, in the sense of covering about 10 essential health benefits that the government wants on the plans. It will cover pre-existing conditions, ongoing medical conditions, maternity, mental health, free well checks for each adult, all the well checks recommended for babies and children, immunizations, and things like that. Have you heard of those things? Are you familiar with that? Usually people are, yes, I understand that. However, in his case, which he would probably say, I don't need maternity, we're not having any more kids, we really don't have any medical stuff going on except for my wife's thyroid. So, but yeah, that sounds great. That sounds very similar to his group plan. So those are the benefits really of the ACA options. The negative to ACA is the networks are small. They're local only. So you're not going to have any coverage outside of usually about a 5-county region. There are a few plans now that cover statewide, but if you're traveling or going on vacation, you're not going to have any coverage unless it's what they call life or limb, meaning you're literally dying or your limb is severed, about to fall off your body. Not like, hey, I was at the, Lake of the Ozarks or the ocean or whatever, and I twisted my ankle really bad. It's not broken. I'm not about to die, but it hurts really bad. If you want that covered, for sure, you would probably need to make that painful trip back to, in our case, the Kansas City area to get that covered. And usually they're very surprised about that. However, I also tell them, most of the time when you're on vacation, you're not going to the doctor unless it is life or limb. Like, I'm having a heart attack. I, was surfing and broke my leg or whatever, something like that, right? So most of the time that being out of network isn't necessarily huge, but just know that if you're on vacation and you're sick, you got a stomach ache, you got to go to the urgent care, or maybe go to the ER because you think maybe your appendicitis, you have that and it's rupturing, and instead they found out you just ate too much Mexican or something. All those charges are going to fall on you because it didn't turn out to be life or limb. So I just want you to know that about the networks with the ACA. And then the other piece of the network is, even in the local area, it's going to be a little dicey. Unfortunately, not all carriers, providers work with all of the carriers on the marketplace. So we have to do due diligence and make sure that your wife's endocrinologist is in network, or your kiddo's pediatrician, or the hospitals that you like to go to are in network. I have done that and did the work as I was quoting this ACA plan, Steve, found that Better did cover all of your providers. So that would be the carrier that I would recommend. Now, on the ACA, Steve, there are 3 different metallic levels. And on the metallic levels, all of those things I mentioned in the beginning are covered. Pre-existing, maternity, mental health, all of those things, they're all covered. It's just going to be how they're covered based on the deductible and the coinsurance and copays of the plan, but just know that they're all covered. The difference in the metallic levels of bronze and silver and gold: bronze is your higher deductible plan, usually no copays, or if you do have copays, they're higher, but the monthly premium is the lowest. If you go clear to the other end to gold, Steve, that's going to be a lower deductible, lowest copays, but highest monthly premium. And then silver's like a happy medium in between. Does that make sense? So you're doing these soft closes all the way through. Does that make sense? What are your thoughts about that? Do you like that? Or give them an open-ended question. But doing those soft closes all the way through helps. So usually people don't have a whole lot of questions at that point. So let's go through this ACA Better Silver plan, Steve. You'll see that this is starting on June 1, as you had requested. It's an $8,100 deductible per person. That is always ×2 for a family, whether there's 2 of you or 10 of you on the plan. It's $8,100 ×2 is going to be the deductible. Then it's 50/50 coinsurance. And people are like, what's that? Is that my copay when I go to the doctor? No, coinsurance means after the $8,100, let's say everything goes sideways and you have a bunch of tests for some reason, you're on the hook for the $8,100. After that, Better says, hey, Steve, you've met the $8,100. We're going to split the rest of the bills with you 50/50 until your max out of pocket is that next number in the line there, $8,700 max out of pocket per person. Again, look at the next line, ×2 for a family. So if all 4 of your family members were in a bad accident, your max out of pocket is going to be $17,400. Any questions on that, Steve? Most of the time they're following along on that. Okay. Now, what was nice about this, Steve, is you did qualify for a little bit of a subsidy there. So this is showing you the original price before the subsidy, but don't freak out because the number gets a little bit better as we go down. 100% of all preventative care is covered on the ACA. So that is your annual physical, the kids' well checks, any immunizations for those of us over 50. And you're not quite there yet, but those of us over 50 get to do all the other fun stuff like mammograms and pap smears and colonoscopies. Those are all covered at 100%. The next line talks about all those essential health benefits that we mentioned earlier, pre-existing in those things. You will get in-network discounts. So staying in network, the average established doctor visit starts about $131, Steve. It's going to get repriced down to about $73 is what we find. That is the in-network discount. You'll see a little bit larger discounts on lab services and things like that. And the final line there talks about unlimited lifetime coverage. So there is no maximum on the amount of money that Ambetter is willing to pay to your providers in a year. Any questions about that, Steve? Most of the time people are following along with this okay. And then I address some of the package pieces next. So we've talked, Steve, about your plan, the deductibles, your max out of pocket. People oftentimes wonder about, what is my, what does it cost to go to the doctor? We've went through those kind of things. The other thing that people ask me about, okay, Amy, I get the out of pocket cost for me for everyday usage stuff, but what about the big stuff? What if that scenario does happen where I, break my leg, or what if I get cancer or something like that? How does that work? So that's a good question. And that is what most people are concerned about, is the big stuff. So let's walk through an injury. And the reason that we talk about the injuries and critical illness, that's 92% of the time that anybody's going to meet their deductible or max out of pocket. To which most of the time people say, yeah, we've only met our deductible like 3 times, twice with our kids. And one time, Johnny got hurt playing football. We were out, $8,000 or whatever. So then I go into, let's talk about that. Let's talk about an injury. So I know your son plays football, and that is a, heavy contact sport. So let's say that he gets hurt, or any of you, for any reason. It could be slipping on the ice, breaking a bone, injuring it in sports. Maybe you slice your finger bad in the kitchen, you're hanging the Christmas lights and the ladder slips and you tear your rotator cuff. All of those things are all injuries or accidents. If you have any type of claim for an injury or accident, your max out of pocket, instead of $8,700, is going to be $250 only, and the carrier is going to pick up the rest. To which they usually say, wow, really? How does that work? I'll give you a scenario, Steve. I blew my knee out a handful of years ago. Unfortunately, the doctor's office was closed at the time, so I had to go to the ER. Then I had to go to the orthopedic surgeon the next day for a consultation. Then I had to have surgery. Then I had to have a leg brace. Then I had to have physical therapy and a little bit of pain meds. Each of those different services are all related to that one injury. So for me, I paid $250 for all of that, and the carrier paid the rest. To which usually they're like, oh, wow, that's amazing. That's better than my group plan. Yeah, you're right. It is better than your group plan in that situation, Steve. Or sometimes they'll say, I wish we would have had that when little Johnny broke his arm because we were out $8,000. And then the other piece of that, Steve, is the critical illness. So critical illness are things like cancer, heart attack, stroke. Those are the big things we think of. There's a slew of other things like burns and paralysis, loss of eyesight, loss of limbs. All those things are considered a critical illness. Now, if you got cancer, let's just say 4 months into the policy, and you wanted to go to, who's your favorite, hospital in town? Which you usually hear it's like St. Luke's. Okay, let's put together a scenario. Let's say 4 months in, you get diagnosed with cancer. You go to St. Luke's for your cancer treatment. You're on the hook for, remember up there was $8,700. Ambetter is going to cover the rest of your costs for your cancer treatment, which is great. They are also going to mail you a check. It's a living benefit check for $30,000. Now that money is yours to do with whatever you want to. You can go on vacation, throw a party, invest it, give it away, whatever you want to do, that's yours. What I think I would do with mine is take 8,700 of that 30,000, mail it to St. Luke's. Now my max out of pocket is covered. I did not have to dig into my savings, cash out some money out of my IRA, take a tax penalty, or just be stressed out with setting up a payment plan for $8,700. Does that make sense? And he's like, yeah, man, that's great. So I'm essentially not really coming up with any money out of my own pocket that I originally had. That's right, Steve. And now you also have the balance of that, which would be $22,300, right? $21,300. That's your money. Now, what I know about me, now we know that this is different for insurance agents, but when I'm not working, I'm not making the same amount of money. How about you? To which almost everybody says, yeah, me too. Yep, but my bills keep coming in the same. So that can become very financially stressful while you're going through an emotional and physically stressful situation of cancer treatment. So that extra money can give you a buffer, Steve, to not be worrying when you're going through your cancer treatment and you're not able to work. This is going to help cushion you from all those bills so you can focus on getting better and getting back on your feet. Any questions about that, Steve? And usually they are super thrilled with that. It's something they really haven't experienced necessarily and are relieved because they now know when something major happens, they can afford to use their health insurance. So many people are like, oh, I have a plan, but I'm scared to go to the doctor because I think I'm going to have a bunch of money that I'm going to have to pay, which to me is super sad. We have insurance. We want you to take care of your health. So that's that part. Then I go into, you asked about dental and vision also. So this shows you here with Prime Star Access, which is acquired through Emeritus, and Emeritus is one of the leading carriers in the individual dental and vision market. The brochures on the dental and vision will be part or are part of this quote sheet. So you'll be able to look at the brochures, but it's your traditional dental and vision plans. So you have your 2 checkups of a year, make sure they're 6 months apart. Those are going to cost you nothing. The carrier pays 80% of basic services day one. So let's say basic services, oh, I have a cavity, I need it filled, I want a little anesthesia with that, please. You're going to get day one coverage on that 80%. After year one, it goes to 90% on major services, crowns, root canals. I don't know about you, but if you've ever had any of those, they are not cheap. They will give you 20% discount on year one, which I know you're like, no, 20% is not that great. But if you've had one of those services, they're about $1,000. So I'll take $200 off any day one. After the first year, they're covered at 50%. Any questions on the dental, Steve? Usually they say, well, that's about how my current plan works. So nope, I'm good with that. And Dr. Jones is in network, so that's amazing. And vision, and I just walk through the vision coverage with them. At the bottom of the page there, I guess this is on, keep going. It shows the premium. So for your plan, Steve, that is a $1,873.71 per month for the marketplace for your monthly premium. How does that sound? And anybody that was on the call earlier this week, he had told me that he was paying about $900 out of pocket for his group plan. His employer covers 50%. So he was assuming the premium was about $1,800, which, and he really wasn't cheating, looking ahead. But the ACA plan premium, typically, Steve, is similar to your group plan without the employer's contribution. So it is quite a bit, usually they're like, oh, that's pretty spendy. Is there, tell me about the next option. So if he's looking at the plan, he's already seeing, or excuse me, if he's looking at the quote sheet, he's already seeing these numbers. Again, like I said, I usually go through the options with him on the phone and then I email this to them. So he isn't looking at all of this. Okay, so any questions, Steve, about the ACA options? And, we're pretty thorough with how we explain them. So then we're able to go on. Okay, I told you I was going to educate you about all the options out there. So the next option is a term plan. Dallas, you can go back to the top. The term plan just means it's set for a certain period of time, thus the word term in there. Now, the term options used to be back in the old days, like for 90 days or between jobs or something like that. But the good news is the terms now are between 1 and 3 years. So the term or the length of these policies are really no different than the ACA plans or your group plan. I imagine when you were at your group that there was an open enrollment period. They're like, hey, the plan is ending. If you want to enroll again, enroll again. Same thing with the marketplace. Plans run January through December. So those are also 12 months. So the term piece of it, excuse me, is really not an issue at all. So going into the term, the pros of the term plan is that the network, instead of different than the ACA, is more like your group plan, Steve, where it's a nationwide PPO network. You're covered coast to coast, so you're covered not only well in your area, but if you go on vacation to Florida or Minnesota or wherever it is that you like to vacation, you're going to be covered nationwide. And it's a PPO, so carriers or providers like Mayo Clinic, MD Anderson, all of those guys are in network. So you can go get a second opinion. You do not need a referral. It is a PPO. To which usually they're like, ooh, I like that. Okay, so let's walk through daily usage of the plan. So this is a $5,000 deductible, Steve, rather than $8,100 on the ACA plan. The max out of pocket is also $5,000. There is no additional co-insurance. So again, for your family, $5,000 per person times 2 for the family, and then you are done with the max out of pocket. Does that make sense? Okay. And the doctor office visits really work the same as they do on your ACA plan, because that one didn't have any doctor copays. So again, average doctor visit runs about $131. You're going to get an in-network discount, goes down to around $73. Now don't hold me to that, because your doctor might charge $140 and it goes down to $79. I don't want you calling me and saying, Amy, you said that it was $73. Mine was $79. So that's just in that scenario. Now let's talk about the worst case scenario on a doctor visit. Let's say you are a new patient at a specialist office. So the specialist is going to charge more because they are a specialist and went to school longer than their counterparts. And 2, you're going to be charged more because you're a new patient that very first time. They have to do lots more paperwork and get you in the system, spend some more time. So that charge is going to be probably around $300. You're going to get about a 40% discount. You're going to be on the hook for that. It's going to apply towards your deductible. The next time you see that doctor, instead of the $300, maybe they're charging $225. So it's going to cost a little bit more, and that will apply to your deductible. Does that make sense? Yes. Okay. And on this United Healthcare term plan, you are going to have a $2 million lifetime maximum benefit on this plan. $2 million is a lot of money. Now, could you ever go over that? Possibly. My sister had mesothelioma cancer. That's the cancer from the asbestos. Super expensive just to prolong your life for a while. So as you will see on here, we have aligned the term with the calendar year. Now it really should say 7 months because we're going June 1 through the end of December. So we're going to run the term to coincide with the calendar year, and this is why. Open enrollment for the marketplace. Remember, they cover pre-existing conditions. That is only November 1st through December 15th. We don't want to miss that open enrollment window if we need to roll you into the marketplace. So we're going to run this plan from now through the end of the year We're going to talk to you just like we do the rest of our clients during open enrollment. And if you, and just have the conversation like we had the other day. What's your health needs? Has anything changed? Do you like your plan? Do you hate your plan? Do you want to move? We can move them during open enrollment and get them onto a term or onto the ACA plan if needed. If not, and they like their plan, their health needs are the same, then Steve, what we'll do is we'll secure then a 1 or 3 year term, depending on what you prefer, running January through December. That way, it's always with that calendar year. If I did a year right now, starting June 1, it's going to end the end of May. What if you have that cancer that we talked about? Your plan is ending and you can't pick up another term plan because you have a major pre-existing condition going on and the marketplace is not in open enrollment. Now you're without a plan really when you need one. So this way we are protecting you from any of those negative consequences. Does that make sense? Which they're like, oh yeah, I get that. So just know that we're going to continue to take care of you. Every open enrollment, we're going to talk. Anytime you have any changes, we want you to contact us and we'll be touching base with you throughout the year as well, Steve. Now, the rest of the United Healthcare plan works very similarly to the ACA plan in terms of accidents, work the same, $250 max out of pocket for you. Critical illness, again, no money out of pocket because you're going to get that $30,000 benefit and you only have to take 5 of that to mail it to St. Luke's in your scenario we walked through before. The United Healthcare plan also has teledoc services. You can call a board certified doctor 24/7 for all the routine things. So I have a cold, I have a flu, I have the sinus infection I get every year in the spring, a UTI, skin rash, anything like that. You can call and talk to that board certified doctor 24/7. They can diagnose you over the phone. They will call in a prescription to your local pharmacy. You just tell them what pharmacy you want that to be. That way you don't have to leave home other than having to run to get the prescription or sending someone in your family to do that. Now, this is not a where you have to use telemedicine first and then they'll tell you if you can go to the doctor. You can do whatever you want to. This is free and easy. I, like most Americans, like free and easy. So you can start with telemedicine and then urgent care or your doctor or anything like that. That makes sense? Oh yeah, usually they're like, oh, that's great, especially when the kids are sick and having to drag them all to the doctor and wait in the sick waiting room and they're crying and everybody's stressed out. That's usually the response we get. Go ahead and scroll down, Dallas. Okay. And then dental and vision is the same as we had visited about on the ACA. Then you see the monthly premium there at the bottom is now $1,000 and whatever change it was, 1,027. Can't quite see it on my side. Can you scroll down, Dallas? Thank you. Sorry. 1,027. So that's significantly less money per month for your premium. And usually they're like, well, I like that better. Like I have a better network. I have a lower deductible, lower max out of pocket. I have the telemedicine thing and it's less money. So why, sometimes we'll get, why is it so much more over there? Why would I choose that? Because it doesn't have a very good network. To which I say it's good that we have the ACA marketplace as options because there are a lot of people, Steve, that aren't as fortunate as you, and they do have some medical issues, or if somebody's going to have a baby, or they know they need some surgery on their shoulder or whatever, that's when for sure the marketplace is the way to go. And some people just like that peace of mind, right? But for people who are healthy, like you and your family, sometimes it doesn't make sense, or it makes sense to at least look at the other options because it's aligning more with what your health needs are and you're traveling and your kids playing sports and being out of pocket less money, not just on the front end, but on the back end. And then I answer any questions that they have. Yes. there's a question. You can unmute, or maybe Dallas can do it. Did you have a question? I think Dennis, maybe. No, okay. All right, Dallas, can you scroll back up and we'll go through the third option on the spreadsheet here. Okay, Steve, in your area, there is another carrier that is pretty competitive on the pricing. It's very similar to United Healthcare in regards to the coverage. As you see, it's again a $5,000 deductible, 100% co-insurance. Everything else works very similarly. Then if you can scroll down, Dallas. And it is a decent amount of money less. It's $760. The main difference in why it is less money is the network is a little smaller. So you're paying a little more for United for a better network. So here in Kansas City, when you mentioned about St. Luke's, the National General, who is owned by Allstate, they use the Aetna network. And here in Kansas City, St. Luke's health system does not work with that network. So if St. Luke's is important to you to have in your network, it is worth the difference in the premium to go to the United Healthcare plan. This is your plan. I want you to do whatever makes the most sense for you and your family, but I just want you to be educated that if you choose that plan, make sure that you tell your friends and family and neighbors, hey, if I need to go to the ER, please don't take me to St. Luke's because my network will not work with them, or they will not work with my network. The other thing I would tell you, because people usually ask, and I don't know, do you think that's very good or not good, or is there any other advantages to United? So, and I'll just tell you as agents, our experience, and we've been doing this for over 10 years, and we do a lot of it, is that we have had little to no issues with paying claims from United Healthcare. It just works beautifully. I have a 23-year-old client right now who has colon cancer. Her parents reached out to me because it's her policy. They wanted to be able to have access to talk to United on her behalf, just to ask some questions and treatment and things like that. And so when I reached out to United and looked up all of her coverage, I said to the parents, oh, she has, accident and critical illness coverage. And they're like, yeah, I know. She got her check for $10,000 because she was young, so she didn't need as much. I got her check for $10,000 a couple of weeks ago. So it just works very smoothly. And on the National General side, we've had, honestly, a lot of claim issues. I do go to bat for my clients to try to get those straightened out, to file letters of appeal. And most of those have gotten overturned, but it's a big stressor for the clients to be battling carriers and paying claims. And, then they got to try to talk with their providers to not turn them into collections because it's just a pain. So my recommendation is if you run both of those and they're both available in the areas and the premium isn't too much different, I would lean towards United. But everybody has their own stories and their own experiences in life, and somebody will, no matter what carrier, oh, I just love United. The next person's like, yeah, I don't really care. And then somebody else is like, oh, my mom had United like 73 years ago and they didn't pay this claim for $200. So but that's our particular preference. But we've sold millions of dollars of National General here in Kansas City. On the Kansas side, National General is the only one of these two that provides a 12-month term. United is only 6 months in Kansas. So obviously, to me, 6 months is a problem because they're always going to run into that situation where it can end in the middle of the year, and then the people are in a potentially, negative, bad situation. So after this, then I say, do you have any questions about the term option, Steve? Because we talked about the ACA in the marketplace, and we've talked about the term options. Do you have any questions about any of those? Most of the time, because we went through this pretty detailed, they're usually pretty good. Then I will tell them, I will send you this now if I haven't already, or you have this. So take some time, read through the brochures, write down any questions you have. If it's something routine, you can feel free to email me back. Hey, I just forgot to ask about this quick thing. And you want to just email back and forth, we can. But if you read through this, you're like, holy smokes, I have 42 new questions. Can we set another appointment? Absolutely. We'll set an appointment, answer your questions. And then they're usually, that's awesome. Don't think I'll have a whole lot, but I tell them again, it's important for me that you understand as much as you can stand to understand and know about your plan. I want you to be fully aware. So if you choose a term option, you're like, you go to the doctor and you have to pay you get the in-network discount and you got to pay the difference. You're like, oh yeah, that's right. I don't have a $35 copay like when I had my group plan. I remember Amy telling me that. So that's the kind of experience I want you to have. There's no surprises. And if they are, they're only good ones, right? Instead of, 40% discount, maybe you got 55. So any questions about that from you all here on the call? If you do, just unmute yourself and ask, and I'll be happy to answer anything. Anybody? I can't see everyone on my screen, but
I do have a question.
Okay.
So is everything going to be on the secure website?
yes, they are recording these and they're going to be putting them up on the secure agent portal, so you can go back and listen to them, watch them.
And the worksheets will be there too?
Yep.
Okay, thank you.
You're welcome. Anybody else? All right, guys, if you don't have any other questions, that's pretty much it for today. So we went through the initial prospecting call, gathering the information, building rapport, finding the pain, making it 911. Now we know what problems we need to solve for them. And then we go out and shop all of the carriers and the plans. We input them into this quote sheet so that we can go through it easily with the clients. They can have all of the information. We're not hiding anything from anyone. We're not just sharing all the highlights and all the good stuff about the plans. We're being real and we're telling them everything. That's where you can sleep at night. They can sleep at night. You don't have to worry when they call that they're mad because you didn't tell them something. So this is kind of the wrap up of that. And then tomorrow Steve's going to be back and we're going to talk more about this system and the quote sheets and how we can build those, how we can put them in there and utilize them, whether it's, that we're focusing on under 65, but you can build quote sheets for Medicare and different things like that. So people have all of that at their disposal. And then we've had a ton of people ask about more training. So we're going to do more training for you all on things like, how do I quote under 65 anyway? And how do I know what direction to go? How do I know if they need ACA or when a term plan is worth mentioning? Or I hear about these indemnity plans and what about that? So we'll talk about those some more. We'll talk about a grid that we use, which is, I think we mentioned it the other day. They have no health and no money. Where should they go? So as you're gathering the information, you're automatically knowing you're probably going that direction. Or they have good health, but they but they have money, or maybe they have health and no money, or maybe they have money and no health. So it's just helping you know, as you're talking and extracting that information, which areas you're going to go, which carriers and things you're going to quote. And then lastly, we have a cheat sheet basically that will help you and like, oh man, I don't know if I can absorb all this crazy under 65 stuff, but it'll help you know, like if I'm looking at this carrier, these are the terms, and this is the, you know, doctor copays and urgent care and that kind of thing. And the one next to it is like this. And then it'll help you also as you're presenting to clients so that you'll remember some of those things. And then the other piece of that is we package, in those packages, we have a platinum, silver, and basic options so that they can see those things. Usually no one really wants to be basic. So most people don't pick basic. Although it's there, I probably have, you know, maybe 10 clients that are on a basic-ish thing, which is, you know, 10 out of 1,000. So that is usually just like the 19-year-old kid who just needs something. You know, they're invincible and they don't have much money. And then there's the silver, which is more robust. And then typically the medical piece with accident, critical illness, dental, vision, and then the platinum is all of those things. And then life insurance and or a indemnity option that will basically pay their out-of-pocket costs when they have a higher deductible. So those things are all coming. Thank you for being patient with us. We're going to get with Dallas to do some more of these, and then they will all be reported and on the SIG agent portal.
Are you going to do anything on group, you know,
Yep.
business to business?
Yep. Then we can do work on group. We'll get through the individual stuff just so it's all kind of flowing together. And then we'll get into group and how, you know, you can access groups, how you can find them, the options to writing them, you know, all the different ways that you can get in and save and package sell group. And at what time, you know, it's better to do something else, and how to kind of grow with the group. So group is great because you can get in there and help them with group. Then you can also help all of the, you know, Medicare eligible people. And that's going to help the employee in that age band to have as good, if not better plan, less money up front, less money on the back end, and it brings the price down of the group or the employer. So yeah,
Yes.
we'll all that.
Okay, thank you.
You're very welcome. All right, guys, any final questions?
All right.
Thanks, Amy. You're great.
All right. You're welcome. You're welcome. Thank you.
Thank you, guys. We'll see you tomorrow.
Thank you a bunch. Okay, yeah, bye.
Bye.